never seen myself as just one thing, and I made sure no one else could either. By staying true to myself, making my own path, rising above expectations, and opening the door for others to be their true selves. The first spirit, made with VSOP Cognac, finished in bourbon casks, Martell Blue Swift, soar beyond the expected.
Check, check. What's up? What's up? Soar beyond the expected. What's up, everyone? Good afternoon, good evening, and good night, depending on where in the world you are joining me from. I am 𝐿𝐿uminati, and this is the Crypto and Cognac podcast show. As always, I'm being hydrated by my friends at Martell Cognac, the Massy Connoisseur team. Cheers to you guys. This evening, we're gonna talk about it. So, first things first. Me, no financial advisor. This, no financial advice. This is just about information, conversation, and education as always. Also, I am not a lawyer. This is not legal advice. This is just information based on my research, right? And why I wanted to make that additional disclaimer, because we're going to be touching on a few things that, some might perceive to have legal implications. We're going to be talking today about Chokepoint, Operation Chokepoint 2.0, right? For those of you all who don't know what that is about, that speaks specifically to a coordinated assault on the crypto industry by the powers that be, I guess, however you want to call them, right? But first, before we get into Chokepoint 2.0, let's take it back, right? Let's talk a little bit about Operation Chokepoint 1.0, right? And so basically, Operation Chokepoint 1.0, which is not just a name that was randomly given to it by conspiracy theorists. This was a real operation. It was actually named Operation Chokepoint. And it basically started in 2011 and was initially targeted towards the online poker industry. And basically, what it did was it allowed for the government of the United States to be able to target what they perceive to be undesirable industries without having to put legislative action in place, basically by targeting their access to banking accounts and access to banking in general, right? So it started in 2011 with the online poker scene. It eventually evolved to include, by 2013, 2014, to include people like payday loan. And let me just give you an idea. It eventually mushroomed to include 30 different industries, right? And some of these industries included ammunition sales, ATM operators, cable box descramblers, coin dealers, credit card schemes, credit repairs, dating services, drug paraphernalia, escort services, firearms sales, fireworks sales, get rich products like DSS, government grants, home-based charities, lifetime guarantees, lifetime memberships, lottery sales, money transfer networks, online gambling, pawn shops, payday loans, pharmaceutical sales, Ponzi schemes, pornography, pyramid type sales, racist material, surveillance equipment, telemarketing, tobacco sales, and travel clubs. So basically, what they basically did was to tell the banks that, if you do business with these types of industries, it may bring some reputational risk to your bank, and we may choose to investigate you. So they kind of put a squeeze on the banks. So the banks will put a squeeze on these industries and basically get rid of them by forcing them kind of underground without having access to banking services. You're obviously forced to kind of figure things out with cash or, you know, through some gray market type arrangement, kind of forcing you to operate through illegal channels. And then from the time you start doing that, then they could trap you, right? Because now you've gone and broken the law, as the case may be, right? So that's where the original Mr. Operation Chokepoint came from, right? But let's talk about fast forward. Okay, so that was started during the last Barack Obama administration, right? And that basically continued until 2017, 2018, when there was an administrative change, right? Now, it might not seem like that from the list that I called out, but a lot of the industries that were targeted by Chokepoint were perceived to be industries that were conservative, right? So it seemed to be kind of partisan, which led, you know, a couple of people to, you know, jump on the bandwagon to kind of defend people in Congress, that is. And ultimately, we kind of saw Chokepoint kind of fade away with the change of administration away from the Democrats to the Republican or the Conservative Party. Fast forward to 2011, we are seeing the popping up of Chokepoint, Operation Chokepoint 2.0, as coined by, what is this gentleman's name? I don't want to misquote him. You know, Nick, is it Nick Carter? No, it's Nick something. Anyway, I'll remember just now. The brain fart will dissipate shortly, but I think it's Nick Carter, right? So he basically started identifying certain activities that he found to be very similar to that initial Chokepoint 1.0, right? Where the various government bodies were putting pressure on the banks to basically squeeze crypto operators and companies. And I think the key point to be made here around both the original Operation Chokepoint and this particular Operation Chokepoint is that it was the government basically targeting legal industries, right? So these were industries that were undesirable from maybe a moral standpoint, but they were operating legally. And I think that's one of the main, I guess, sticking points that a lot of people have with this is that, you know, these were companies that registered legitimately and were trying to operate legitimately and were being pressured by these government bodies. Now, as we get into the conversation about what happened with the Chokepoint 2.0 and all the different government bodies that got involved, it's a long list of alphabet boys. And so I decided, you know, because we're going to be using so many acronyms, let's gain a little appreciation for who is what, who is who, where there might be overlaps, because we keep hearing about the FTC, we keep hearing about the Fed, we keep hearing about FDIC, we keep hearing about SEC. So let's figure out who is who, right? Let's start with the Federal Reserve Bank. So the Federal Reserve Bank, or the Fed, is responsible for conducting the nation's monetary policy by influencing money and credit conditions in the economy in pursuit of full employment and stable prices. that is very interesting because some of the policies that they're implementing right now, especially as it relates to driving inflation down, is directly targeted towards increasing the unemployment numbers. So it's kind of, how are they going against their mandate? Anyway, also the supervising and regulating of banks and other important financial institutions to ensure the safety and soundness of the nation's banking and financial system and to protect the credit rights of consumers. Now, they have a few of these alphabet boys that seem to have some regulatory responsibility for banks and other financial institutions. So I could see why there are so many, conflicts and so much fighting between them to figure out, who has responsibility where, especially as it relates to crypto, because cryptos exchanges are analogous to banks. Then we have the actual cryptos, which may be perceived as securities, but then there are some cryptos like Bitcoin and Ethereum who have been considered by the CFTC as commodities. So yeah, anyway, let's go through the list, right? So maintaining the stability of the financial system and containing systemic risk, which is a topic that is being talked about a lot as it relates to the bank runs and the potential fallout from that, the potential contagion from that, and then providing certain financial services to the US government, US financial institution, and foreign official institutions, and playing a major role in the operating and overseeing of the national payments system. Now, there's a joke about the Federal Reserve, right? So the Federal Reserve Bank is actually privately owned, right? So, and it no longer uses gold to back the money that the Federal Reserve issues, right? So there's a joke that the Federal Reserve Bank is not really a bank. It's not really federal because it's privately owned, and they really don't have no reserves because they have nothing back in the US dollar. So maybe it's time for a name change. Don't say I'll say so. It was a meme. I think I saw it on TikTok. Or you already have beef with them, go find them. The next one, the OCC, which is one that we don't hear so much, but an important one, the Office of the Comptroller of Currency. They actually had a fairly important role in this whole Operation Chokepoint that we're going to talk about a little bit more later. And the OCC charters, regulates, and supervises all national banks and federal savings associations, as well as federal branches and agencies of foreign banks. The OCC is an independent bureau of the US Department of Treasury. Now, we're going to continue hearing about independent this and independent that, but what we will find is that a lot of them seem to be directly under the control of the executive branch of government, and that's some of the things that people have a major issue with, because the executive branch is not supposed to circumvent the Congress in making decisions, not supposed to circumvent the judiciary as it relates to making laws. And that's one of the big issues with this Operation Chokepoint, because again, it's going around the execution of legislation, using the banks as a tool and using these bodies as a tool to put pressure on industries that they are not too happy with or okara with. And in this case, that industry is the crypto industry. Next, the FDIC, the Federal Deposit Insurance Corporation. The FDIC insures deposits, right? So one of the big things coming out of Silicon Valley Bank was the fact that most of their deposits were uninsured, which means that most of their deposits were over the $250,000 US threshold that the FDIC would traditionally insure. And that's why the Fed decided to step in and the government decided to step in with their not a bailout to provide insurance and to insure the deposits of all deposit holders at this particular bank. So the FDIC, they insure deposits. They examine and supervise financial institutions for safety, soundness, and consumer protection. They make large and complex financial institutions resolvable, and they manage receivership. So something that you would have heard is that they would have stepped in, took control of Silicon Valley Bank. They would have done the same thing to Signature Bank over that particular weekend, which of itself has some shadiness about it. But again, you're seeing another institution that has some kind of responsibility for examining and supervising financial institutions. Then we have the SEC, which is the Securities and Exchange Commission. This is the one that we know most about. We keep hearing about them. Them is the big boys. Always, when it comes to crypto headaches, it's always them, right? And their mandate is basically three-part, right? They are supposed to protect investors, which they keep talking about. They are protect investors from crypto. They are protect investors. They are also responsible for maintaining fair and orderly and efficient markets. I don't know if they're doing that, right? Because things not looking little fair, because we're seeing people who's supposed to be in charge somehow always fortunate or lucky enough to buy low and sell high just before things start hitting the fan. I don't know if it's fair, orderly. I don't know if it's orderly or efficient, because I mean, we've seen investment banks blowing up. We're seeing they can't figure out between them and the CFTC who's supposed to regulate what. So I don't know. But they're also responsible for facilitating capital formation. And I feel like that's the one that they keep forgetting about. Like they're not too interested in that one. I don't know. Then we have the CFTC, the Commodity Futures Trading Commission, and they're responsible for protecting the public from fraud, manipulation, and abusive practices related to the sale of commodity and financial futures and options, and to foster open, competitive, and financially sound futures and option markets. Now, these are the guys who recently would have filed a lawsuit against Binance, claiming a couple of things that Binance, one is operating and selling, trading commodities in a jurisdiction that they have no license for. They continue to sell to US citizens, which they're not supposed to do. They have a separate exchange for that, Binance.us. But I don't know what Binance is supposed to do if Americans use VPNs. Those who might hold dual citizenship might use a secondary form of identification. How is Binance supposed to manage that? But maybe we'll do a different episode of the podcast where we're able to talk a little bit more about that specific situation. But they basically manage the commodity side of things. And one important thing to note, that kind of almost in contradiction to what the SEC would have said a few months ago about as it relates to Ethereum being a security. In this particular lawsuit, we see the CFTC making the statement that the commodities that Binance was illegally operating in include BTC, ETH, and Litecoin. I don't even know where they pop up with Litecoin. Somebody in the CFTC might be trying to pump their bags, because I don't know who still talk about Litecoin. But yeah, that's what the lawsuit say. On to the next one. This is the one that we don't know so much about. We do hear so much about the Department of Financial Services. And basically, they supervise and regulate the activities of nearly 3,000 financial institutions. This is the NYDFS, the New York Department of Financial Services. You would find that a lot of the major financial institutions tend to be under their regulatory or supervisory purview. So sometimes they're the ones who are stepping in to file lawsuits, to to close operations and blah, 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 blah. So those are the alphabet boys that you're going to hear us talk about. So the Department of Financial Services, the DFS, the Commodity Futures Trading Commission, the CFTC, the Securities and Exchange Commission, the SEC, the FDIC, which is the Federal Deposit Insurance Corporation, the OCC, which is the Office of the Comptroller of Currency, and the FED, or the big Mr. Fed, the Federal Reserve Bank. Let me take a little break there and check out the comments. Stephen is in the building as always. Stephen says, don't forget FEAR. Fair. Yeah. So Stephen on board as usual. Always. Thanks for being with me, guy. So back to Chokepoint. So basically, as early as I would say January last year, we started seeing a change in the approach towards crypto and the crypto industry by these various institutions, right? So in 2021, the OCC was headed by a guy by the name of Brian Brooks, right? And he introduced something that that those in favor of it said was beneficial to all these various institutions that were being attacked by Operation Chokepoint, called the Fair Access Rule. And basically, it prohibited banks from withholding their services to disfavorable industries for reasons that could not be quantified or non-quantitative reasons, right? He basically said, yo, or stop that shit, right? Once they're legally registered businesses, you can't deny them your services because you decide that they are, bring reputational risk or whatever is the case. But he stepped down, I think, in January 2022. And interestingly enough, his successor, Mr. Blake Paulson, reversed that rule on the very first day, right? Now, a lot of people who are critical of the rule said that the rule was put in place to favor firearms manufacturers and distributors, whatever is the case, but it was also benefiting a lot of other people. So that was reversed, and we could really look at a trail of carnage that kind of picked up steam in December last year after the FTX fallout in November. Mr. Nick Carter, who I was telling you all about, he said he spoke to people in the banking sector who were saying that these supervisory bodies were telling them explicitly, yo, listen, not deal with no crypto company. So, but these official kind of actions that were no longer, closed door, behind the scene type of discussions, I think could be traced back to December 2022, right? So on December 6th, our favorite person, Senator Elizabeth Warren, her and a couple other people, John Kennedy, Roger Marshall, they sent a letter to crypto-friendly banks like Silvergate, basically lambasting them, telling them, how well they could provide service to FTX. What the hell are they doing business with Alameda? They went crazy on them in that letter. And then The day after that, Signature, which was one of the most active banks in the crypto space in terms of having crypto clients, they announced that their intention was to halve the amount of deposits that the bank would allow to be ascribed to crypto clients, right? So they went from having crypto deposits totaling at its peak $23 billion to reducing that to about $10 billion. What that means is that difference of $13 billion worth of legitimate, I mean, if it's deposited in the bank, we count it as legitimate because they should have done the KYC, the AML, all of that before the money gets to the bank. But that $13 billion worth of legitimate crypto business, crypto money, had to find somewhere else to be, right? And they also decided they were gonna exit their stablecoin business. So that's our next whole scene. So that's the day after this letter gets sent to Silvergate. So clearly they was like, yo, Silvergate, get back up. Let me jump out of this scene, right? Let me back down a little bit. And that's basically what they did. Now, by January 3rd, we saw something that is not very common. We started seeing joint statements coming out from some of the alphabet boys. So the Fed, the FDIC, and the OCC released a joint statement on the risk associated with banks engaging with crypto. And they didn't explicitly ban banks from being able to hold crypto or deal with crypto clients, but they basically said in a strong way, you all should be dissuaded from operating with these guys because of safety and soundness. Let me see if I could find the statement. I'm going to try to pull up the statement quick. Basically, the joint statement on crypto assets risk to banking organizations, the Board of Governors of the Federal Reserve System, the Federal Deposit Insurance Corporation, the FDIC, and the Office of the Comptroller of Currency. Collectively, the agencies are issuing the following statement on crypto assets risk to banking organizations. The events of the past year have been marked by significant volatility and the exposure of vulnerabilities in the crypto asset sector. These events highlight a number of key risks associated with crypto assets and crypto asset sector participants that banking organizations should be aware of. Risk of fraud and scams among crypto assets, blah, 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 blah. I'm not going to read that whole thing. But basically, that's what they did. So, whereas last year we kind of saw them fighting each other to see, who will take down the big fish, which was crypto. January 3rd, we started seeing them putting out joint statements. They were a cabal now, right? And by January 9th, we saw the Metropolitan Commercial Bank, one of the other few banks that serve crypto clients, announcing a total shutdown of their crypto asset related business. That same day, Silvergate stocks fell significantly because, if Metropolitan Commercial doing this, people like, who's the next crypto bank, boy? Silvergate. So their stocks fell significantly to just about $11, right? Now, at its height, earlier last year, around March last year, Silvergate stock was trading at $160, right? So the stock fell, I guess, like a crypto. And then by January 21st of this year, Binance announces that due to significant policy changes at Signature Bank, they will only be providing or processing fiat transactions worth more than $100,000. Now, everybody thought that this was a Binance related issue because there had been so much fraud around Binance leading into the year. And people thought, okay, this is an issue with Binance because they insolvent or they don't have the reserves for crypto, blah blah blah. Turns out it wasn't that. Binance was just trying to abide by Signature Bank's rules. A week later, January 27th, the Federal Reserve, they deny that the crypto bank Custodia, they deny their application to become a member of the Federal Reserve System, right? So Custodia is a crypto bank. They've been trying to get their license for 2 years. And finally, on January 27th, the Fed say, nah, guys, we're not dealing with all that. Again, citing safety and soundness risk. Sound familiar? That same day, the Kansas City Fed branch denies the application for Custodia to have a master account, right? Which would have basically given them the ability to use wholesale payment services and to hold reserves directly with the Federal Reserve. So they say no banking license, they say no master account, right? And then on January 27th, the same day, the Fed also issues a policy statement which discourages banks from holding crypto assets or issuing stable coins and broadens their authority to cover non-FDIC insured state chartered banks, right? Now, why this is particularly interesting is that Wyoming had a special purpose depository institution license for institutions like Custodia, right? And basically, the Fed give itself the authority to also cover those types of things. So basically, they took away the responsibility, they took away the right to control those things from the state level and decided they were going to control it at the federal level, right? On that same day, the National Economic Council released a policy statement. Again, not explicitly banning banks from serving crypto clients, but again, strongly discouraging. And we just in January, all of this is January. February, the DOJ, the Department of Justice, one of the alphabet boys that we didn't really talk about, their fraud unit announces an investigation into Silvergate over their dealings with FTX and Alameda. So from initially being scolded by these particular congressmen and women to an investigation being opened by the DOJ a month later. By February 6th, Binance suspends US bank transfers for retail clients because, again, they have no bank to operate with, right? Now, this didn't affect Binance US. This was just Binance Holdings. And then by February 7th, the January Fed statement is entered into the Federal Registry, turning it into a policy, from a policy statement into a final rule. Now, what's interesting about this is that they had no congressional review, they had no public notice or comment period, right? They just went from straight making the statement to making it a final rule. And then by the 8th of February 8th, Protego and Paxos applications to follow Anchorage and obtain the approval to become a national trust bank are still outstanding 18 months later. Well, past the 18-month deadline. Usually there's a deadline for the resolution of that application, and it continued on past that time. And it basically looks like it was the intention of the OCC to deny that application, those applications outright. Now, all of this, sorry, I'm just checking the comments this here. Me and Stephen, I checking one boy. Yeah, so basically the Fed gangster gangster the banks. That's what happened, right? I'm not getting into you or have you talk about that's like the Chinese mining shutdown. But yeah, I mean, so all of this happens January, February, and then a couple weeks ago, everything happened with Silicon Valley Bank, right? And you know, there are people who speculate as to whether or not Silicon Valley Bank was just in the firing line of a coordinated attack on these crypto banks, Silvergate and Signature, but the Fed hadn't realized how fragile their own banking infrastructure was, their own banking industry was. And a lot of people speculate that had Silicon Valley Bank not gone under, then crypto would have been blamed for the undermining of Silvergate and Signature, and ultimately that would have been used as a reasoning to really drop the hammer on crypto. Now, even during the collapse, people were still kind of speculating, and people were still trying to drive the narrative that this was something that was caused by their crypto exposure. But Silicon Valley Bank, being the second largest banking collapse in US history, being one of the top 20 banks in the US at the point in time, now that we've had some time to kind of assess what has happened there, it is almost undeniable that it had nothing to do with crypto, and it had everything to do with the Federal Reserve raising rates by 500 basis points in the span of a year. And the interesting thing is that this wasn't even a consideration when the Fed themselves did their stress tests on the system. Them raising rates by 500 basis points or 5% over the span of a year, this wasn't even something that they themselves contemplated in their stress testing of the banks. I think another thing that wasn't really contemplated in terms of their stress test, and I think that's something that they're going to have to look at now, is that their stress test is usually done based on the premise that people are going to line up outside banks and try to withdraw cash from their bank accounts. But I don't think they contemplated the fact that people have ATMs, people have online banking, people have smartphones, people could transfer their money out of banks right from where they're sitting, and maybe not withdraw it in cash, but they could move it to another bank that they feel safer in, another bank where they have an account. So I think the speed at which the bank run was executed is another thing that led to this collapse. And it's I don't think we out of the woods yet. I don't think the banking system out of the woods yet. We see what happened with Signature, with Silicon Valley. We see what happened with Credit Suisse, and First Republic was on the precipice at a point in time. So I think all of these are considerations, because I think a lot of banks still have exposure to the whole duration mismatch with their treasury bills, because as depositors call on their deposits, these banks are forced to sell their treasuries before term to cover these deposits, and meaning they're forced to sell it at a loss, right? So I think we had to thank Silicon Valley Bank, because if they didn't go under, I think this whole situation would have been used as a justification to wipe crypto out of the banking sector. And I think some of the things that are most evident of that fact is how Signature Bank was dealt with as compared to Silicon Valley Bank, as compared to First Republic, right? Because Signature Bank, according to people on their board like Barney Frank, they said Signature was still solvent up to the point where they were shuttered, right? So people are asking the question like, because Friday came, they were still in operations. Saturday came, they were still in operations, and then boom, Sunday, like a thief in the night, they were shuttered, right? And that's not how things usually go. Usually, it happens on Friday. It gives the bank time to kind of sort themselves out over the weekend, get funding over the weekend so that they could reopen stronger on Monday. But that didn't happen. Signature, they came in like a thief in the night. Sunday night, um, they weren't given access to this the expanded FDIC coverage that First Republic and other banks were given access to. Even the FDIC was surprised when the DFS put Signature into receivership and handed them over to FDIC, because in their mind this was a solvent bank, right? The next thing is that Signature Bank wasn't even allowed to be sold. The crypto part of their business was not allowed to be sold, right? Signet, which is their real-time fiat trans onboarding platform, that was closed down, right? And basically that was the last major fiat to crypto on-ramping system in of the major banks, right? So a lot of questions are still, up in the air about what happened there. What was the reason why Signature was closed? What was the reason why Signature wasn't allowed the same luxuries that First Republic and some of the other banks, like ParkWest, were afforded? And then we saw that the FDIC basically went to banks and said, now that they cannot exceed 15% of their overall deposits in terms of their exposure to the crypto industry. And what that basically means is that no bank, unless it's one of the major banks, right? No bank really will have enough deposits to really, or access to enough deposits to really scale their crypto business to get to the point where they're able to create network effects, because of this limitation of having only 15% of your deposits in crypto. So we may still see some banks take a little risk, a little 10%, a little 15%, but we're still talking that's 10 million, 10 billion, 15 billion at most for the decent sized banks, the 100 million, the 100 billion deposit banks. But I think it feels like the US the US banking sector has kind of made a decision about how they feel about crypto and whether or not they want to be a part of it. I think it's left to be seen what happens as a result of that. Do they just force crypto offshore? Do we see other territories picking up that slack? Or Does this set a precedent, especially in territories like Europe, especially in territories like the Caribbean, which we are most concerned about? What does this do? What does this choke point, what precedent does this set as it relates to dealing with crypto businesses? I mean, we in the Caribbean already have banks that have taken an adversarial approach. Even I could tell you, registering a company that is a crypto company. My company is a crypto consulting company, but it has crypto in its name, Crypto Caribbean. It took a year, 1 year to get it registered. So I don't know. I guess we'll wait and see. But one thing is for sure, that what we've seen with Bitcoin's continued pump, I think Bitcoin touched 29,000 today, the first time for 2023. I think it shows the resilience of crypto. I think it shows that people very much see Bitcoin as a safe haven asset. And I think this is the most amount of FUD, the most amount of direct attacks, the most amount of coordinated attacks we've seen on the crypto industry in its history. And we still at 28,000. For me, you know how I feel. It says to me that adoption is inevitable, bro. They can't fight with, right? So, just like the picture, humans be choking out Bat all the time, but somehow Bat is just laugh it off and keep going. And it seems like that's what Bitcoin doing, right? I know there are going to be some casualties along the way. I hope those casualties do not live in your portfolio. But I will continue to keep an eye on it, and I will relay the information to you. Guys, as always, do your own research. This is not the church of the Crypto and Cognac podcast, right? It's no religion here. Don't trust nothing I say. Go out there and get the information for yourself. Do your own research. This is not financial advice, my brother, my sister, right? 𝐻𝐍 sitting down here, drinking cognac, talking to a camera, vibes with my boy Steven and all you other listeners, right? I might be drunk, for all you know. So, guys, thank you so much for being with me. Another Thursday, another Crypto and Cognac podcast. I truly appreciate you guys. I truly love you guys. Continue to be safe. Continue to be strong. Continue to do your own research. Continue to pay attention. Some people say we're not in a bear market, but we're still not really in a bull market. So, guys, this is a time to pay attention, to do your education, to get the information. Stay away from scams. There's a lot of free information out there. You do not need to pay anybody tons of money to learn about Bitcoin. Pull up a YouTube channel, go back, start with the first season of the Crypto and Cognac podcast show, catch up. You have 82 episodes to catch up on, and it's free. So guys, be safe out there. Try your best. Don't do nothing illegal, but in your crease. Because right now, them go come for you. So, live good, and we'll wait them out, right? Adoption is inevitable, guys. As always, your boy 𝐿𝐿uminati. I'm out. Be good, be blessed. Steve-O, thank you, buddy. As always, blessings, love.